pull up the chart of MCX, that stock's doing well. Remember, yesterday there was some kind of an update which came from the SEBI press briefing where you will obviously the stock has been doing well after the options trading has been approved in commodities, and MCX India is currently trading with gains of 2%. There was also an update with regard to the alternative investment funds participation into the commodities side. But let's get a better view on what one can watch out with regard to MCX. We are joined by Mrugank Paranjape, who is MD and CEO at the company. Mr. Paranjape, good morning to you, and thank you very much for joining us today on BTVi. First up, I want to ask you, how prepared are you to introduce options trading in commodities?
So the preparations have been going on for quite some time and now fully geared up in terms of the internal processes, the systems, and whatever we would need in terms of taking this new segment on. I think what we will now engage over the next 45 days is with the market, with the physical participants, with the hedgers, and with our members to build more awareness, to build a lot of insight into how, because there are some nuances of how options are going to trade in commodity derivatives versus how they trade today in the securities markets. So I think we will need the next 45 days is what we're going to use for that. And we are sort of hoping that we will be able to trade in options on commodity derivatives somewhere by the end of July, beginning of August. So that's our preparation. Mock trading should start soon, and then we should have a circular out for that as well.
Right. So, Mr. Paranjape, this is Piyush. Now, the question here is, I'm trying to actually make it simple for our viewers to understand why your stock is reacting positive and why your basically stock has been outperforming over the last few weeks. In terms of option trading, how much significance or how much importance do you think the entry of alternative investment funds or mutual funds would be for the top trade segments in which you are actually going to launch options? And I understand almost 5 option categories, they already qualify for option introduction. So with respect to that, what do you think, like what difference it's going to make to number one, liquidity, and to number two, volumes over a span of 12 months or 15 months?
So I think when we look at both the advent of options as a new instrument, and when we look at AIFs, mutual funds as a completely new class of investors, I think what it does is what we've all been asking for, which is deepening and widening the market as far as commodity derivatives is concerned. We have consistently maintained that to widen and deepen this market, you need more instruments. Options is the beginning, and we are hoping that as per the path that SEBI has now laid down, we will see more contracts which become eligible and are allowed to be traded, and then we go into maybe index and then later on complex derivatives. Again, in that sense, AIF is historic, not so much because just one segment will add tremendous volumes, but because it paves the way for institutional investors to come in. So I think this is the beginning. We hope that the industry and we together can create good products which investors can make use of, and that will then enable other classes of institutional investors like mutual funds, PMS, FPIs to come in as well. So in our opinion, this is the beginning of that journey in terms of the expansion of the entire market, and with both options and institutions coming in, that journey has well begun. What it does to volumes, I think, is very difficult to hazard a number as a guess for 12 months. But in the long run, we believe that options are an additive to the.
All right, we seems to have, there's some technical glitch. We will reconnect with Mr. Paranjape. But Piyush, ICICI Securities has come out with a report on MCX where they've maintained their buy rating with the target price of about 1,345. And if I go by the triggers, they've clearly mentioned that mutual funds and AIFs have been allowed to invest in commodities. So that could be positive. But is there any cap that has been introduced? Like what up to what limit can these mutual funds and AIFs can invest into commodities?
Yeah, there is a basically allowed limit from the regulator.
Right.
But what's more important is, remember, as he was highlighting, about 30-37% is the global average actually for the option volumes to combine the total derivative volumes. So expect India actually to follow the norms, follow a similar sort of benchmark over the next 3 to 5 years. It's a long-term gestation process, but analysts, they are estimating the option revenue contribution could increase to 14% by FY20. And remember, it's an exchange business. The infrastructure remains the same, more products, and then the volumes increase, operating leverage goes up, the margins are going to go up for the stock. So that's why actually the stock actually has been seeing good positive traction. Now, not only this, if actually we like Nifty futures, we like Bank Nifty futures, so the next actually product in the pipeline is actually launching indices. So basically, just imagine the index commodity trading. You could be having like a precious metal index, or you could be having the entire commodity index. So that actually could be loved by the institutional investors who would like to have another asset class where they could actually take exposure, and that could be again a significant volume driver. So and that's why actually the stock actually could see a totally different sort of leak once you start seeing the option trading to shape up. The next trigger could be the universal license. So we know that the SEBI has been talking about merging all sort of asset classes, which means the NSE, BSE in terms of the equity, futures, and also commodities all being traded on the same platform. So again, on one side, you would think that...
How would that work? I've not heard about that.
Yeah. So again, like it would be so interesting, so easy for the same customers to actually switch between equities and commodities whenever they want in the evening also. So again, that could drive volumes.
Long working hours for us as well.
Absolutely. Yeah,
but Piyush, I just want to understand, there was a lot of ambiguity with regard to what kind of settlement will happen in the options trading, whether it will be like cash, what we usually see in the equities market, and there were talks that there could be a part cash or a part delivery based settlement coming about. Any clarity on that front?
I think that clarity is still awaited.
That's
why,
pending.
So I think once the settlement, and I think that should come before the option introduction starts. So perhaps between...
Because that's very important actually, on basis of which a trader, I don't think, will take any positions in the commodities options if there is any kind of delivery based settlement. Yeah,
so I think that should be coming in the next 1 or 2 or 3 weeks maximum. Some sort of clarity came, but I think more clarity needs to be coming. I think the platform is already ready from MCX. What I hear is like the mock trading is going to start in the 1 or 2 weeks next, and I think they are all set to launch in the August month. So perhaps I think those clarity will be cleared out very soon, and I think after that, I think then it's a matter of they're going to see how the traders and brokers they start settling in, and then sooner actually the products will start getting launched.
Which means the financials will reflect these numbers in the second quarter of FY18.
No, I think Navneet, you know, a new product like option will need actually 2 or 3 quarters.
2-3 quarters to completely reflect the numbers.
Yeah, so I think FY19 full reflection, but FY18 I think 4th quarter will be the quarter which will actually show you the impact.
Right, and if you go by ICICI Securities report, they've clearly mentioned that they estimate revenues to grow by average 18% over FY17 to 20, and they estimate profits also to grow by average of about 21% for MCX over FY17 to FY20. Clearly, the stock's doing pretty well. If you could just pull up the intraday chart also, I think it is trading at, no, actually it's cooled off from its opening highs, but nevertheless, it is still trading in the green with gains of almost 2.5%. On that note, we will, sorry Piyush, you had to say something?
Yeah. Just remember the stock actually has gained 8% over the last few weeks in anticipation of the institutional trading to start. So as soon as one after another, the hurdles will keep on crossing. The brokerages actually are expecting the stock to move basically inch higher. Fundamentally, the only one fact is volumes go up, commission goes up, the margins go up, the stock will start looking much better.
And they kind of have a monopoly actually in the commodities segment. So that's a positive, and it's a high entry business. So you may not get new exchanges coming up anytime. So MCX definitely is going to gain, but on YTD basis, we've seen good gains coming about. But remember, the top of MCX is actually 14 to 1500. So let's see if the stock can revisit those levels. But we'll take a break on that note. Don't go anywhere. On the other side, we will continue with our market coverage. Stay tuned. All right, welcome back. You're watching Dealing Room. Well, good going for the markets. Nifty at 96.68. Which are the stocks which are contributing to today's gain? Now, once again, your heavyweights like HDFC, which is contributing nearly 9 points to Nifty's gain today. Reliance is contributing 7 points. Infi, ITC, Tata Motors, HDFC Bank are other of your couple counters. And on the flip side, it is HUL, GAIL and ONGC alongside TCS, which are weak, and those are the indices, those are the stocks which is dragging Nifty lower. But we were chatting with the MD and CEO of MCX, Mr. Paranjape. He's back in online with us. Mr. Paranjape, we were talking about the turnover. What kind of turnover do you expect to come from the options trading? I'm not talking from a quarter or 2 quarter perspective. I'm sure you would have done your maths there. Just tell us on a 1-year basis, if you were to launch options trading in August, what kind of turnover would you expect?
We have maintained in all our discussions with investors in the past, and we've said to the market, we are going to have a launch with one contract, as has been mentioned in the guidelines, and which means that the next contracts will probably come up only in December, January. So from a contribution to volumes or a contribution to revenue, I don't see a very high contribution coming in this financial year. But when we talk about the longer term sort of gains that one makes from having options as a second product alongside futures, in general, we have seen that there is a 20-30% additive revenue which comes from options trading globally. In India, that percentage has been higher in equities, and we expect a similar trend. So over a 3 to 5 year period, we believe options will add something like a 30-40% to the overall revenues that one generates on the futures side.
So to start off with, tell us which is the commodity where you would be launching options contract, and besides that, what other approvals are pending from SEBI in terms of the other commodities?
So as you'd be aware, we have 9 contracts on our exchange that are eligible as per the volume criteria. SEBI has asked us to look at the top 5, which means we'll be looking at gold, silver, crude, natural gas, and zinc. Given the depth of participation, given the end-to-end value chain that participates, the bullion segment makes the most sense for us to start this contract. So that's the most likely one. We should be finalizing very soon and applying to SEBI. So from an approvals perspective, this is the usual process for all products that within the guidelines, when we got our homework done, we go back to SEBI with the product approval, and once they approve, we can start trading. There is some clarification which CBDT is likely to issue on the exact treatment of how transaction tax will be levied in this segment. But that's mainly a clarification because there is enough precedent both in commodity futures as well as in equity options. So it should be on similar lines.
Right. So, Mr. Paranjape, I'm just taking one step forward here. Now, if I just see the equity markets, the introduction of Nifty futures, Bank Nifty futures was a turning point for the entire derivative space. So, I'm going one step forward. When do you actually expect, if gold, silver, they already actually, do you think they are allowed, and you're going to start with the precious metals, when actually do you think it would be possible for launching index products in the commodities? And I'm trying to understand, will it be like a complete commodity index, or there will be a lot of indices like precious metal index and different sort of commodity category index?
So in terms of, I think the way the market has been approaching this, and SEBI as well as CTAC has been approaching this, it's a phased approach. Options, everybody agrees, was the beginning. And therefore, we think index will be allowed. Now, a timing difficult to predict, but I would think in the next 6 to 9 months, we should see index allowed within the commodity futures market. In terms of what index, what products, we have already announced that we have signed up with Thomson Reuters for a partnership in both creating and propagating commodity indices. So we will be developing, along with Thomson Reuters, indices which we believe will help the market both in terms of mitigating their risks, but also in terms of ensuring that the market has a good instrument with which they can hedge their entire portfolio when it comes to the commodity. segment. So that's our plan, and let's see, what makes sense, whether it is a single commodity index or whether it's a basket consisting of a segment. Those are the sort of things that we'll explore over the next couple of months.
Right. So, Mr. Paranjape, I'm just coming back to options because there is a belief, and as we see, and that's why actually option, they generate so much of volumes in the equity markets. What sort of tax savings, or rather like what sort of tax difference could be between the options and the futures, which is normally conceived that that's why option trading could pick up faster, because traders normally save a lot of regulatory levy if they actually trade in options.
So I don't think it's a saving of a regulatory levy, because to the best of my understanding, that's levied on a similar basis. The fact is that you are able to hedge your positions, you're able to hedge your portfolio, you're able to take some sort of risk mitigation by locking up much smaller capital. So if you're talking of, and let's say gold, a 1 kg gold contract with all the margins that you would pay would probably lock up anywhere between 2.5 lakh to 3 rupees today. Whereas if options come in, you'd probably be able to get the same risk mitigation or the same sort of trading that you want to do by putting up only 30,000 rupees as your contribution. The second big benefit you get in options is that you don't really pay mark to market if you're a buyer of the options. So I think those are the two big benefits which induce people into looking at options as a easier tool for their risk mitigation.
Right, Mr. Paranjape, we appreciate you joining us today, and all the best with your new product, which will be launched in the month of August. Well, the stock of MCX has been doing pretty well, but in the meanwhile, let's cut into SEBI Chairman Ajay Tyagi.